And that is a huge headwind to all other forms of energy. The US can't decouple from China because China holds monopoly power in many critical supply chains. It's quite sad to see Trump fall for the same trap. All sanctions against Russian energy will fail. The world needs Russia's energy more than it needs to transact in the US dollar system.
Okay, ladies and gentlemen, so today we have Doomberg back on the show. And today we will look at the US economy, commodity sector, precious metals, energy, and many other very interesting topics. So, sir, thank you so much for being here.
Hey, great to be back with you. Enjoyed our last conversation.
Yes, I did too. I did too. And very happy to have you back. Very busy times with the precious metals, of course, with the economy and everything. So let's start with the macro picture, like we always do. If you look at the US economy, what would be some of the things that you are paying attention to, and what's your overall view on what's happening right now?
Yeah, when we look at macroeconomics, the first thing we do is start with the energy markets, and those are extremely well supplied from a physical perspective. Natural gas in the US still in some spots of the country can't be given away. Oil is hovering around $60 a barrel. Coal isn't doing anything too exciting. LNG prices are at, basically multi-year lows. And so cheap and abundant energy is a good foundation for economic growth. Obviously, the next thing that we look at is the status of the trade war between the US and China. And that has escalated, but also, Trump being Trump, the headlines shift by the day. Seems like everybody's happy again if you look at the stock market. Um, and then obviously the war in Ukraine, something that we're keeping a very close eye on. And then the last thing I would say is we're watching this tsunami of money pouring into the United States as a result of investment commitments made to President Trump as he goes around the world. He's in Asia this week, of course, as we're recording this, and in Japan this morning. Hundreds of billions of dollars just from Japan, hundreds of billions of dollars from Korea, hundreds of billions of dollars from the Middle East. We're starting to see, a lot of money chasing relatively few deals, which means fortunes can be made and lost, of course. And so this all seems sort of historic and somewhat challenging to model, but at the same time, interesting enough that we certainly have no shortage of things to write about or to talk about here with you.
Yes, and do you think that approach that Trump is using is sustainable?
Um, it's a good question. It's unique. Look, Trump has a cabinet filled with business people, and the US government is investing alongside some of this foreign money, and US taxpayers are getting, at least an opportunity to get a good return on what would normally just be giveaways and grants, which we think is an interesting approach. So if you look at the MP Materials deal, for example, US taxpayers in exchange for the injection of cash received preferred stock and warrants, and I believe those were struck at somewhere around $30 a share, and the stock is trading in the mid 60s now, which means the U.S. taxpayer has much more than doubled their money because they doubled the money on the preferred stock, and then the warrants are well into the money as well. And so, but the volume of cash that's coming, um, we do fear that there's a bit of a sequencing issue. Like the rare earths dust up caused us to write about this, a piece we wrote called Gloves Off. There's a significant sequencing issue. The US can't decouple from China because China holds monopoly power in many critical supply chains, and those are the same critical supply chains that outside money is investing alongside the US government in some cases in the US and in friendly nations like Australia, like we saw with that rare earth deal last week. Um, China can choke all that off, which it has signaled it is willing to do. So it remains to be seen what comes out of the meeting between Xi Jinping and Donald Trump, scheduled for, I believe, this week. And the details aren't always all encompassing of what was actually agreed behind closed doors, but nonetheless, we have to make do with whatever information we could get our hands on, and we are anxiously awaiting the readouts from that meeting, especially from the Chinese side. Trump on Truth Social tends to be kind of boastful and says many things that turn out not to be true. Whereas, if you read the readouts from the Chinese, they tend to be a bit more, let's say, tepid in their description of what was agreed to.
And what does this Trump's style, I suppose, of dealing with other countries mean for the US dollar for the next few years?
I think it means that the US dollar has to get weaker. Um, at least, well, it depends what you mean by US dollar. So, are we going to measure the value of the US dollar against the basket of currencies known as DXY? Or are we going to measure the value of the dollar against gold? But I think if Trump's objective is to unwind 50 years of one monetary policy, i.e., the hollowing out of U.S. manufacturing base and gaining sort of financialization, lower interest rates, running deficits, exchanging paper for goods. If that's going to be unwound, then you think that the dollar has to weaken. But how and why currencies trade is well beyond my personal zone of expertise. I find it an interesting mystery, but still a mystery nonetheless.
Hmm. And just to touch on the stock market and the current valuations as well, sir, it just looks like, retail investors, all the passive flows, everything goes in the stock market's favor from the perspective that it's difficult to imagine something that's going to stop this trend. How are you viewing the US equities market?
Yeah, obviously, when we look at traditional measures of valuation, things seem to be extraordinarily elevated. We don't really participate in the public stock markets to any large degree because we prefer to build our own businesses and to invest privately. Um, and so we observe it, but we don't have emotional attachment to big swings in our portfolio. Um, we have certainly probably missed a big chunk of the run up, and we wouldn't chase it from here. There's certainly parts of the stock market that are in a significant bubble as well. And so this one of the reasons why we don't trade in the public markets is we don't have any edge. We don't have information asymmetry. Much better to build businesses in private.
Yes, and so there has been this approach from financial advisors saying that, if you want to make money, if you want to invest, you should stay in the markets, you should dollar cost average, invest all the time because markets keep going up. How are you viewing this whole approach?
I mean, for most people, I'm sure that's fine and has worked out well. But the challenge, of course, is as you near retirement, one significant drawdown and a decade of hard work and savings could go down the tubes. So if you were looking to retire in 2008 or 2009, for example, and you still had significant exposure to stocks, our philosophy is that we earn money in fiat. We exist in the U.S. dollar system. We save by buying real assets like gold and land and collectibles, and then we invest privately where we can personally impact the outcome. We call this creating sweat alpha, where we generate our own returns. I'd have to go back and see. I suspect that our private returns have outdone on the stock market. It only takes a few home runs in your private investing to make up for all of the ones that don't amount to much, and there's plenty of those. And so that's just our philosophy. It's worked quite well for us. For example, building Doomberg is probably the greatest investment any of our team members have ever made. And so if we were, doing a regular job and maxing out our 401k contributions, we would not be in the financial position that we're in today.
That's a very, very good point, sir. I think we also have to mention the bond market a little bit. So, I was talking to a lot of people, and of course, some people don't want to touch the bond market. Others look at it, well, if the Fed is trying to lower the interest rates, we are sort of seeing some signs of a slowdown in US. Maybe bonds look attractive. How are you viewing bonds?
Yeah, I wouldn't own long-term paper on Western fiscal, fiscally impaired Western governments. I do own a fair bit of short-term paper, 1 to 3 year treasuries that are liquid, and that it's better to get 4% yield than no yield in a bank account. But that's mostly just liquidity for future private investments. And I own a fair bit of gold as well, mostly in sort of retirement accounts and some physical, just because it's a great way to save. But the short-term treasury is fine. I wouldn't own anything 10, 15, 20 years. Interest rates will, of course, come down, but we believe that ultimately the only solution here is debasement. And so why do you want to own fixed income on a lot. Now, look, if you're a pension fund and you have fixed, dollar expenditures that you need to make, and you just match your expenditures with the coupons, that's fine. You're doing your fiduciary, but you're promising a nominal amount of dollars. For most people, we're interested in preserving real purchasing power, right?
Just a very quick break, guys. So I've spent the last 12 months creating this course, Wealth Building Blueprint. I've put an unbelievable amount of effort into it. I cover investing, trading, speculating, business. The course is perfect for people who are still relatively new to this wealth building process. And I also offer 3 days money back guarantee. No questions asked. If there's absolutely anything that you're not happy with, you will get your money back. There's also a private community where you can ask me any questions, you can talk between each other, you can share news and things like that. The link will be in the description. Right now the course is at a 70% discount, and let's continue with the video. So the last time we spoke, gold was around 3,500. Right now it's hovering, it's very volatile, but it's hovering in around that 4,000 area. With all the factors that moved gold to these levels, with the big players, the central banks getting involved, how are you viewing the gold market at the current price, of course, measured in fiat dollar?
Yeah, gold is interesting. I said we own a fair bit of it. I took some off around 4,300, maybe 20% of what I own, deciding when I'm going to put that back in. It just felt like gold had gone up too far too fast. We don't tend to trade. I don't mind, managing around the edges, but like you say, we had talked, gold was at 35. Then it jumped up basically another $1,000. And so took about 20% off. I still hold a core position. And if gold drops to 36 or 35, I would probably put that 20% back to work. But long term, I always have a core position in gold. Obviously, one of the reasons to buy physical is that you don't transact in it very much, and so it's easier to just buy and hold. But I think the trend long term is still bullish gold as measured in US dollars. I don't think gold actually changes that much. I think it's more about the Western world. One of our favorite plots is to look at the DXY price of gold. So you sort of isolate the US dollar and its movements against the euro or the yen or the pound, and you just plot the price of gold as measured by DXY. Interesting chart. But nonetheless, put it this way, we don't invest in gold hoping that the nominal price of gold goes up. We hold gold as a savings vehicle to preserve purchasing power for future generations.
Yes, that makes total sense. And if we look at silver as well, so of course, in theory, it still has that correlation to gold. We can see that on the chart, but it also has that industrial side as well. Also, if you look at things like gold to silver ratio, if you look at the prior peak in 1980s and inflation, adjust that, that would be around $200. And of course, we have the Hunt brothers and all of that. But I would like to get your perspective on the silver metal at the current price, and how are you viewing the fundamentals?
Yeah, we don't trade or own much in the way of silver, mostly because it is not really a monetary metal anymore. It's predominantly an industrial metal and linked to renewable energy, solar, and so on as one of the key outlets for silver. And once a metal like silver makes the transition from monetary to industrial, it becomes an exercise in studying demand and supply curves and so on, like the platinum and palladium boom bust cycles that we've seen in the past. So I wouldn't look at gold silver ratios as anything meaningful anymore. What's driving silver is the demand for it in industry. And since silver is mostly a byproduct of mining other metals, its supply is relatively inelastic. And so you see these wilder swings. I guess you could sort of analogize it as a bit of a Bitcoin more than a gold, much more volatile, which makes it great for trading. If you're a trader, we're not traders, and so it's not really something that we spend a whole lot of time studying, to be perfectly honest with you.
Mm-hmm. And if we do believe that commodity price, so gold price over the long term should go higher for some of the reasons we have mentioned, would that make the mining stocks attractive?
In theory, yeah, sure. Why not, right? Because if gas is, diesel is cheap and gold is going up, then their costs are going down and their revenue should be going up. Of course, with gold miners, you have to understand their hedging books and the management teams and the propensity for fraud in that space. It's largely uninvestable for much of the big money world. Um, but yeah, I mean, if you have the right management team and they have a good asset and they get good financing, then sure, it certainly silver at 50 or silver at 100 or gold at 4,000 or gold at 5,000 is a lot better than silver at 25 and gold at 1,300. And so, but the whole metals and mining sector is just its own little ecosystem, and again, there's all kinds of opportunities to make fortunes and opportunities to be defrauded, and so it's buyer beware for sure.
De- Definitely. So if you could touch on the energy sector, oil and natural gas, if you could give us an idea of how are you viewing these over the short term, let's say the next 12 months to 18 months, and over the next few years as well, with all the fundamentals and things that are happening right now. And of course, I understand it's difficult to predict, but I would just like to get your thoughts around.
Sure. Yeah. So first of all, gold is not a commodity. Everything else are commodities, right? Silver and natural gas and oil. So when I say the following phrase, I want to be specific. The long-term real price of all commodities is lower. This is because the commodity producers are deflationary machines. And so that's one. You only need to plot how many barrels of oil an ounce of gold buys you to see that over time, make a 50-year chart of it. And so we don't like to own commodities or commodity producers because it's like owning the VIX. You're just going to get ground down over time and lose real purchasing power. Now, one of the challenges in the commodity space is every once in a while there's a shortage and you see a super spike in price and people get very excited about that prospect. And so if war is coming or something like this, they'll get long the commodity and hope to catch a spike. Our view is you should wait for such spikes and then fade them because shortages are always followed by gluts. But overarching all of this, there is a huge energy arbitrage that is shaping the energy markets, which is just the infinite supply of ultra cheap natural gas in the US and around the world. So today, natural gas in the Permian is trading on a 12-month strip basis at maybe $1 per million BTU, which is the equivalent of $6 a barrel oil. It's the cheapest supply of the cleanest burning hydrocarbon in the world. And that is a huge headwind to all other forms of energy. Oil will be dragged down by it. There's a few nuances. We're working on a piece right now on this whole subject. How, for example, the gas turbine shortage driven by AI demand is actually increasing demand for coal as people switch to steam turbines in Asia because they need to make their power plants and they're not going to get a gas turbine in time. And so you have to understand the nuances, but that overarching glut of dirt cheap, clean burning natural gas is, we think, the biggest story in energy, which makes it difficult to get excited about getting long oil, for example, because when you have so much cheap natural gas, you just switch the engines and you burn natural gas instead of burning oil because heat is heat after all.
That's very interesting. And if we look at uranium, what does that mean for the uranium sector?
Well, uranium is a commodity, and the long-term real price of all commodities is lower. And so we wouldn't be interested in owning uranium or uranium producers necessarily, unless there was a particularly good one where you knew the management team and the resource was excellent. But even then, you want to get in early at the right terms. And so there's plenty of uranium in the world. It's just a matter of price. And so if we see a super spike in uranium, we'd wait for it to trace back 20% and then probably buy puts because 6 months from now, 9 months from now, or 6 months after such a spike or 9 months after such a spike, you can rest assured that the price of uranium will be much, much lower.
Okay, that's crystal clear. If we could talk about recent tariffs that Trump put on some of the Russian companies like Lukoil, do you have any insight into that?
Yeah, all sanctions against Russian energy will fail. The world needs Russia's energy more than it needs to transact in the US dollar system. Not only will they fail, but there's a serious risk that they will backfire because if the price of oil spikes, then Russia just sells less volume and makes it up on price. We've been writing this since April of 2022. It's quite sad to see Trump fall for the same trap, which is surprising to us considering the quality of the energy team he has around him. And so Russia's oil will find its way to the market. Iranians have found no problem getting their oil to the market. You know, Iranian oil exports, I believe, are at like a new all-time high recently. And so, you know, Russia's a sophisticated player. China will figure out a way to get Russia's oil. China's going to ignore any sanctions. India's going to ignore sanctions. Don't be fooled by headlines. I saw a headline this morning. Many people sent it to us about Lukoil selling its international assets. I mean, Lukoil is primarily a domestic oil and gas producer. And then finally, imagine a world where the U.S. institutes a naval blockade of Russia and stops every drop of oil and LNG getting to the market. Well, two things happen. The price of oil and gas for everyone else skyrockets, and the price of oil and gas domestically in Russia goes to zero. I mean, they possess the commodity. The U.S. is an energy superpower. The U.S. would probably benefit in that case because it could export at a higher price. But Russia and its, military industrial complex will have a bountiful supply of cheap hydrocarbons to make bombs and planes and tanks and steel. And so, there's no scenario in which increasing the sanctions pressure against Russia is going to A, meaningfully impact them, or B, cause Russia to change its strategic objectives in the war in Ukraine.
Mm-hmm. And if we could also talk, so I'm very interested in this myself. So there's this clear relationship between China and Russia. And what do you think is the goal of China with so is it just the trade between two countries, or are they trying to ally together against the US, I suppose?
China has only one significant vulnerability left on the board, and that is it is incredibly short oil. In other words, it needs more oil than it can produce domestically for now. And Russia produces more oil than it needs domestically, and so it's a perfect match. And this is why, of course, the spice will flow and sanctions will be ignored. And ultimately, the attempt to sanction Russian energy, which is a catastrophic mistake, this will cause, in the long term, a great bifurcation in the global economy. There'd be the US dollar system and then the sort of black market slash brick system where critical commodities are traded between entities that only exist to do that one thing. So imagine you'll just put the Chinese refinery in a off-balance sheet LLC somewhere, and they'll never need a US dollar. They'll just trade back and forth in their own currencies and settle any imbalances in gold. And that's what we're seeing.
Right. And if you look at China, so what do you see China's trying to do, let's say, for the next 10 years? What is their big plan? Is it to invade Taiwan and take it out because they believe that it should be part of China? Like, what are they trying to achieve for the next 10 years?
They want complete self-sufficiency and more control over their local sphere of influence. And obviously, Taiwan is an issue that's hanging out there as well. Those are the big goals for China. They're quite clear about it. They're having their plenary meetings this week, and we'll be interested to read the speeches and the readouts. But that at the highest level, independence, self-sufficiency, military security, and reunification with Taiwan.
Right. And do you believe they will try to achieve reunification with Taiwan in the next few years, or is it a big longer term plan?
I suspect that their objective is to achieve reunification in the same way that they managed to regain control over Hong Kong without firing a shot. And there's a world where Taiwan would greatly benefit from, a reunification with China. Taiwan, of course, is an energy island. There's all manner of history, of course. I'm just sort of speaking from a physics perspective. China is this giant elephant right next door with an enormous amount of coal, with nuclear power, with all manner of excellent technologies. And in the long term, I think the thermodynamics of the situation would indicate that reunification makes the most sense.
And how would that happen without firing a bullet? Like how would the whole process happen?
A negotiated, agreement between China and Taiwan with limited or even significant autonomy for Taiwan over time, which, by the way, like contrary to how things are portrayed in the Western world, I think it's a very split issue internally in Taiwan. There are strong feelings on both sides. And so you can imagine a world where, you know, the Chinese and the Taiwanese get together and they settle, 80-year-old grievances. I mean, it happens. We wrote a piece a couple of months ago where we predicted that the Koreas might unify in the same way that the Germans did after the fall of the Berlin Wall. And so these types of things, we're talking about decades and centuries long cycles, but in the long run, you could imagine a world where the Chinese and the Taiwanese coexist in a negotiated settlement.
Right. And if we could talk a little bit about Europe and its energy security, how are they preparing and if they are prepared for the winter from that perspective?
Well, I mean, the Ukrainians are facing a very tough winter, of course, but Europe in general is mostly fine, from what we can tell. I mean, broadly, Europe's energy policies are a complete catastrophe and will ultimately be the undoing of the European Union itself. But this particular winter, depending on the weather, of course, they've had plenty of time to get their affairs in order after the energy crisis of 2021, 2022. And so we don't see, our base case is not a major energy emergency in Europe.
Right. And so if they do have issues with energy in the future, will they just have to go back to oil and gas and cut on all the renewables, maybe go back to nuclear as well?
I mean, we don't see any signs of it, right? I mean, Germany was just blowing up nuclear plants earlier this week. Um, Unless and until the current batch of leaders gets wiped away, I'm saying Macron and von der Leyen and Starmer, even though the UK is not in the EU, Donald Tusk, Friedrich Merz, unless these leaders get wiped away, they seem hell-bent on hurtling towards the hard wall of physics as fast as they can. They will eventually collide with it. But they're deindustrializing, their economies are stagnating. They don't have energy. If you can't have energy, you can't have heavy industry. And if you can't have heavy industry, you can't be a military power. And if you're none of those things, you're geopolitically irrelevant.
Yeah, that makes total sense. If we look at the US dollar, it's still, of course, the reserve currency. With everything that's happening and consistent devaluation, we can see what the gold price is doing. Do you think there will be a moment where people will stop accepting it and will try to look for a new system, maybe currency backed up by something tangible?
I mean, the US dollar, look, the British pound used to be the global reserve currency, and it's still an important currency today. Um, it's not like, I mean, the moat of the US dollar system is significant and not to be underestimated, but that doesn't mean it's permanent and that other systems might not pop up alongside it. And the sanctions war is damaging US treasuries in a way that makes them less neutral. And if treasuries aren't neutral, they can't serve the role of a neutral reserve asset for the settlement of imbalances in international trade. The Brits aren't worried about it. The French aren't worried about it, but are the Middle Eastern countries thinking about it? Are certain countries in Latin America thinking about it? Or certain countries in Asia thinking about it? Sure, might they become the next subject of tariffs and sanctions? And so, I think the treatment of India and Brazil, two BRICS members, has been pretty interesting to observe. And so that's a message to sort of the dozens and dozens of countries that may have or might someday, fall into the crosshairs of whoever becomes U.S. president. I think the whiplash between the Biden administration and the Trump administration is only destabilizing that analysis.
Right. So we covered a lot. I would like to ask you what would be maybe top three or top two things that you are most paying attention to, like just in general. What's mostly on your mind?
Yeah, how the war in Ukraine resolves and how the trade war with China resolves. Those are obviously the two big stories for the rest of the year. Everything else is a derivative of that. And then obviously U.S. adventures in the Western Hemisphere seem to be heating up as well. And so that's maybe a third. Those are our top three things that we scan the headlines for, and we keep our eyes on the markets to see if anything big is changing.
Right. And do you think Trump will try to get involved with Venezuela?
Yes. Yeah. We wrote a piece on Inauguration Day called Misreading the Room about Maduro. And we wrote a piece about 6 weeks ago, I think, called Mosaic Theory, where we predicted much of what has unfolded since then. Argentina, the bailout of Argentina, the buildup of tensions with Venezuela, tensions with Colombia was mentioned in that piece. Brazil being the big question, of course. Guyana, Trinidad and Tobago was mentioned in that piece. I notice now there's a big dispute between Venezuela in that country. And so, thermodynamically, again, just using physics and oil as our guide, you could see all of this coming. And so, yeah, you don't assemble. Historically, the US has not assembled an armada like that without putting it to use.
Right. And how do you think it's going to actually take place? Will it be like few day or few weeks, very quick operation?
It's hard to say. I mean, I suspect this is a hybrid military slash color revolution attempt. And if the color revolution fails, it is far more challenging to just implement a pure military solution there. The US has dangerously low stockpiles of weapons because of both the war in Ukraine and the war in the Middle East. And so I think they need a quick and decisive war because last time the US fought a multi-year war in the jungles, it didn't turn out too well.
Right, that's very true. And so, just before we wrap up, I like to ask this question for the younger audience. With everything that's happening and everything, it's quite difficult for a young person to get involved because of the inflation, because of so many different sectors and choices. If you could give an advice for a young person on how they could start off their wealth building path.
Yeah, I mean, when you're starting out, your objective is to get a good job, to impress people, to work hard, to show up, to be ethical, to be honest, and to invest in your own skills. It sounds cliche, but it works. If you wake up, show up, make the number go up every day, there are no tricks. The trick is to be better. The trick is to outwork your competition. The trick is to outskill your competition, to generate enough wages and salaries and savings so that you can someday graduate from labor to capital. And then once you graduate from labor to capital, then that's a whole different objective. But in the early years, just showing up on time, working hard, being honest, being polite, and being receptive to feedback will put you in the top 5% of your peers. And consistently being in the top 5% of your peers is a solid way to generate enough savings to eventually become capital.
Short, sweet, and powerful. Thank you so much for that. So these are all the questions I had, sir. Is there anything else that you would like to mention that maybe we haven't covered?
Yeah, sure. Just we've got a new project that we've launched. If you don't mind, I wouldn't mind pitching that. Obviously, you can find all of our work at Doomberg.com. But on September 1st, we launched a new project. The Doomberg team launched Classics Read Aloud. One of the Doomberg co-founders and its editor-in-chief is very passionate about classical literature. And as the name implies, with the Doomberg quality production, we're publishing, once a week, excellent short stories, novels, novellas. Find it at classicsreadaloud.substack.com. Vlad, it's always great to see you, my friend. Keep up the good growth trajectory and talk again soon.